Welcome back and happy new year, guys. It's 2025. Let's smash our property goals. This is the year where we make massive gains, we make good investment decisions, and we make a better life for ourselves and for our family and for the people that we love. That is why we do property investment. We're just trying to put ourselves in a better position. And I thought I would do something very, very different to every other buyer's agent, every other property guru, every other property podcast out there on YouTube currently. And instead of actually going in and talking about which locations you should be investing in 2025, I'm going to tell you about which locations that you should be avoiding in 2025 because they don't make any more sense to invest in these locations. Now, you've probably already looked at the screen and be like, oh, this is the first location I'm talking about. And you're damn right, it's Rockhampton. Rockhampton is one of those locations in 2025 that I will not be personally investing in. And there are very specific reasons for that, but it comes down to one main reason, and that's the simple fact that it has grown far too much. And if I go into hashtag, you will actually see exactly why. And just for those of you who don't know, I do have a promo discount code for hashtag, which gives you 25% off, which saves you money straight away. So let's actually look at Rockhampton and why I don't think it's a place to invest into. And when you start to look at Rockhampton on a region level, not just a suburb level, we can see just how much it has grown already by simply scrolling down. And we can see that in the past 3 years, it has grown over 60%. 60% is an incredible amount of growth in 3 years' time. That's almost averaging 20% every single year. And just last year as well, you can see it has risen by 22%. So as an investor, I'm going to be sitting there and thinking, hey, I've already missed out on 20% growth last year, and over the past 3 years, I've missed out on 60% of growth. So would that be the most wise decision to invest there if I'm buying at the peak of the property cycle in this suburb and in this area? Probably not, right? But is there caveats to this? Absolutely. But I still want to go through the suburbs as well. And so when we scroll up here on a suburb basis and we start to look a bit more in detail, and I go to expert view, and when I click onto the past 3 years growth and arrange them by descending order, we can see some of the suburbs that have risen more than 60%, almost 100%, such as Mount Morgan, Lakes Creek, Rockhampton City, West Rockhampton, Berserker. I know Berserker is a very popular place for a lot of buyers agents to be buying at this point in time, and you can already see that it's already had almost 70% of growth. And if you want to verify this with another source as well, if you go to the postcode of 4700 for Rockhampton on SQM Research, which is a publicly free resource, you can see that in the past 12 months it had 46% growth, and over the past 3 years another 60% of growth. So this is not an ideal investment location for those who are looking to reap the benefits of the most amount of capital growth. And not only that, but this leads on to my second point, and that's the simple fact that yields are no longer as attractive as they were in 2021 and 2022. We can see that in 2021, the yield of Rockhampton was close to 5.77, around 6% yield. And if you buy really well, you can get a 7 to 8% yield. However, in today's time, the yield is only around 4.6%, maybe 5% if you're lucky, but around 4 to 5% is what you're going to get in Rockhampton, especially with all the buyers agents overpaying for the property in the area. Now, this is also on a region level basis of the entirety of Rockhampton. There's also markets within markets and suburbs within suburbs. You can also see stock has been rising since about June onwards in Rockhampton as a region level, and days on market is still trending down a little bit, but you can see a little bit of spiking. So there's a couple of things that concern us about Rockhampton. Now, there's also another issue within Rockhampton that is not exactly talked about among buyers agents, online, property gurus, etc. This market is no longer an owner-occupier driven area. This is among where all the investors have crowded upon. All the buyers agents have come along and started booming up and propping up the area. And that's a problem for us because we don't really want to be buying in areas which are already investor driven. We want to be earlier. We want to catch the market when it's about to start growing. That's the key importance. Now, there is still a caveat to this as well. However, I will tell you that after we go through the second location. Now, sticking with the trend of far north Queensland, we're going to be talking about Townsville as a region that you maybe should not consider investing into at this current point in time. Now, Townsville also follows a very similar line of thinking as Rockhampton. Most suburbs have risen by more than 60%, as you can see on here. The yields are no longer as attractive because they have been falling since 2021 because house prices have rapidly increased over the past 3 years, and that means yields are no longer as attractive. And you need to understand this is just gross yield. And then you need to also factor in insurance costs. You need to also factor in high rental management fees, the fact that you're buying in an arguably riskier flood zone area, there are cyclones. These are all important considerations that you need to take in and weigh up against other locations around Australia to invest into. When you start breaking down the numbers and the figures, it's almost equivalent in terms of cash flow to invest into Townsville as it is to invest into regional Victoria in certain locations. Now, obviously, if you rank this by ascending order, you can still find locations within Townsville that are below 30% of growth, which I would consider investing into. However, I would be very, very careful about overpaying for a property or not buying the right quality asset because there is so much investor activity and buyers agents activity within the area that is no longer owner occupier driven. And this is why it's also important to verify statistics over multiple sources, because as on HTAG you can see that 4812 postcode is showing us about 30% growth in this suburb, while the suburb postcode of 4812 on SQM research is showing us about 17% growth or 16% growth per annum over the past 3 years. So that's almost close to 50% growth over the past 3 years, and that should concern us. We're no longer buying here, we're buying at the peak. And that could be very risky for some retail investors. Now, I did say after location too, I would give you a caveat about buying in Rockhampton and buying in Townsville. There is a situation where you have to buy in these areas. And that situation is when you're specifically looking for growth in the next 12 months. If you're still trying to achieve extraordinary growth, $60,000 to $100,000 over the next 12 months, then you still should consider these very, very hot markets. But you have to accept that you will be overpaying for the property. You will be competing with a bunch of buyers agents who are overpaying for the property. Your valuation may come short, so then you have to put up more money so that you can cover the shortfall. And the fact is that your property after those 12 months, after those 12 to 18 months, may sit flat for the next 10 years. These are risks that you must understand and may possibly want to trade off amongst other locations. Because in the same token, other markets like regional Victoria or regional New South Wales or regional South Australia, these aren't hot markets. They're very cool, growing steadily markets that no one is really paying too much attention to. And that means you won't find that extraordinary growth that you found in regional Queensland in 2024. And I hope that makes sense, but there are 3 more locations that I still have to go through for you guys. So make sure you are watching the video till the end, because the location that I'm talking about may come up on this list, and you need to make sure that you listen to the video before you go and invest in these areas. And guys, before I go any further, make sure you are subscribed to my YouTube channel. There's over 60% of viewers who watch my videos who are not subscribed to my YouTube channel. So make sure you are subscribed to my YouTube channel. Apart from that, I also do have a completely free newsletter with over 600 subscribers who get a weekly newsletter every single Wednesday that I go through a different location, its economic diversity, its location and infrastructure, and my opinion about that area. This is absolutely free. There are no catches. And if you need that extra guidance and you are looking for that private community mentorship and guidance, I have a private community that is $35 a month, and there's over 84 members currently within the community that are getting help from me, direct advice and opinions. So please make sure you join that as well if you're trying to smash your 2025 goals. Okay, now we're talking about location number 3, and that is the city of Playford. That includes locations like Elizabeth South, Elizabeth Downs, Davern Park, Salisbury. These locations is what I'm talking about when I'm talking about the city of Playford. And the reason is once again, it has grown significantly over the past 3 years. And some of these locations have had ridiculous growth over the past 3 years. When you consider Elizabeth Down, Elizabeth North, South, Davern Park, all hitting above 100% growth in the past 3 years. The people who bought there have done very well, and I congratulate them. And I know people who have bought there. But the people who want to invest there now, I'm telling you, it is not the right time. We don't want to be investing there because you've already missed out on 100% of growth. That $300,000 home that was there 3 years ago is close to $500,000. right? You've missed out on possibly $200,000 to $300,000 in some of these areas. And location number 4 is where my friend, my close friend, made over $300,000 by buying a property for around $320,000, and it's now revalued at $600,000, or a bit more than that from memory. It's just ridiculous the amount of growth that Armadale has had, and Perth in general, that I would not be considering investing into this location anymore. There has just been an immense amount of growth within this area. The yields are not as good as it was 3 years ago. And as you can see here, Armadale has risen over 105%. It's absolutely bonkers. There's also a couple more things that are more concerning about Armadale. There is a higher rented to owner occupier ratio because there's a bunch more East Coast investors from Sydney and Melbourne who have now come in and clouded the market of Armadale and Perth in general. And we can also see that affordability has skyrocketed to over 50 years. That means a suburb is no longer affordable to local residents. And if local residents can't afford it and investors leave that area, then you might expect a small downturn or a flatlining of prices for a very long time until wages catch up and wages start to increase. So this is a location, again, that I would not be considering. So once again, this is a location that I would not be considering. So Armadale is completely out of my list. And there's also a couple more in Perth and around Armadale as well, like Camillo and Kelmscott, that I will be very, very wary about jumping into. Location number 5, and this is also in Perth, WA, and this is Gosnells. Gosnells in WA, Australia is not a location that I am keen on investing into, and a location that has been very popular among BAs, among investors to go in and invest in these areas. Once again, it's had 85% growth. The yields are no longer as attractive as it was back in 2021, 2022. The rented to owner occupier ratio is actually pretty good in this area. Affordability, once again, is a problem, sitting around 45 years, which means that it's no longer affordable to local residents within the area. We can see stock on market starting to flatline and no longer have that decreasing trend. And we can see days on market, there's still demand in the area, but I think that's mainly due to BAs and investors within that area just propping up that price. There are people within the community who have bought in Gosnells who have made significant amount of money, who are even considering possibly looking to sell that property to free up equity and buy in another new location. And so this is once again a location that I would not be considering to buy into. And when we look at the entirety of Australia, there are so many markets to invest into and so many suburbs that you can consider that I really would not be considering these hot, very hot markets because you've already missed out on significant amounts of growth. But like I said, there is a caveat, and that is if you are looking for that very, very quick equity in the next 6 to 12 months, then you're still better off buying in specific, very specific suburbs within hot markets to maximize the growth. So I hope that has given you a little bit of clarity around where you should not be investing into, and I'll continue with my suburb breakdowns from next week onwards. And I really hope you enjoyed this video, and I wish you a happy new year, and I hope that you will continue to invest in property in 2025 and you will share that journey with me via my YouTube channel, or you can also join my private community as well. It's $35 a month, it's $1 a month, or just about $1 a month, and there is so much value jam packed into it that it is a no brainer if you are looking to buy in 2025. Let me guide you. Till next time, thank you.